Hello, everybody. Welcome back to another episode of Commercial Real Estate Secrets. I'm your host, Austin Hare, and today our guest is Kevin Cumbus, and he's the president and founder of Tusk Partners, which is an M&A advisory firm focused exclusively on the dental industry. And so they've got quite a few transactions under their belts now. And so, Kevin, I'm really happy to have you on the show today. How's it going, my man?
Hey, Austin, it's going well. Nice to speak with you.
Thank you. Thank you. Well, cool. Yeah. So interestingly enough, I know you're in Charlotte now, and I'm from the Charlotte area, but it seems like you moved there the same year that I moved out of there.
Yeah, our cross almost path, right? Our paths almost crossed there.
Yeah, that's funny. So, tell us a little bit about yourself. What did you do prior to all this? Like, did you know that this is the course that your life had set out for you from an early age?
Yeah, so when I was 7 years old, sitting in class, I did not say, when I grow up, I want to value and sell dental practices. No, Austin, it was not that clear to like a dark black line from kindergarten to this point. I think looking back over my career, it makes a lot of sense, but certainly this was never the master plan.
Interesting.
So I grew up in a dental family. My dad's actually a pediatric dentist down in Montgomery, Alabama. So in the summer times was invited to come into his office and clean trays and sterilize equipment and pour up models and build space maintainers. And, he was seeing 100 screaming kids a day in the summertime. So I got exposure to the dental industry at a very early age. Like many sons and daughters of dentists, I thought that was going to be my path. So when I went to college, my second year, I took Chem 111. I was all amped up for that class. I was ready to take it. I was fully prepared, had my calculator and notes, and went in there. And I studied harder than I've ever studied for any class in my entire life, before or since. And the teacher pulled me aside before the midterm and said, "Kevin, I see you've been putting in the hours, but I will tell you right now, there is no way you could pass this class."
Wow.
So he said, "Look, I'm going to give you a D- if you just promise to never, ever come back."
Wow.
So I gladly took my D- and said thanks to Dr. Uffelman and never cast a shadow on the chemistry department's stoop again.
Wow.
So that kind of like really, it shook me. It was hard on me. I kind of went home that holiday season with my tail between my legs and confessed to my father I'd never be a dentist, and quickly found my way over to a love of accounting, finance, and business. So graduated with a business degree from Washington and Lee, and connected with some guys from the Northeast, and they were kind enough to invite me up to the city and show me the ropes of Manhattan. I got a job working in a securities trading firm and investment bank pretty quickly, and spent 4 great years on Wall Street. It was a lot to learn at a young age. I would love to tell you that I saved a bunch of money and could retire early, but the reality is I took full advantage of that city, and every penny I made, I left there.
Wow.
It was a ton of fun, but more importantly, I was able to cut my teeth and get exposure to the sharp elbows that is Wall Street and the private equity world.
So was it at all like they portrayed it to be on those movies like Wolf on Wall Street and everything like that?
Well, I'll tell you this story. So I was when I started, I was working for Bear Stearns, and Bear Stearns. For those of you who are too young to remember, Bear Stearns was a 100-year-old broker-dealer, financial firm, investment bank that went down during the crisis of Wall Street. Right, it was a bank. It was an investment bank that was too big to fail that didn't make it. And this is right in the .com bubble, right? So I graduated in '99 and was working for a pretty old, stodgy firm. Somehow a headhunter found me and invited me to join a company called Market XT. They were going to double my compensation and give me a bunch of stock options. And I had a bunch of buddies making a lot of money, and they're a small startup company. So I said, "To hell with it, I'm out of here." I'll never forget calling my father and saying, "I'm leaving Bear. I'm going to work for this company." He said, "Look, that company's been around for 100 years. It's going to be around for another 100 years. It's the most foolish decision you've ever made." But so I show up, and you asked if it's more like the Wolf on Wall Street. When I walked into this building, we were right across from Trinity Church, across the street from the Twin Towers. When I walked in, it was the whole floor of the building, completely gutted. There were like folding tables up everywhere, computers strewn throughout the space, and wires everywhere. It looked more like Boiler Room than it did Wolf on Wall Street. But they were happy to pay me to show up, and I was happy to take their money and learn. But it was eye-opening, some of the things I saw up there.
Wow. Yeah, that's crazy. Because it's really, I don't know, by some communities it's glamorized, by some communities it's demonized, but just all of the stuff that happens up in Wall Street. And now, it's much more decentralized. It helps to be there, I think, close to the heart of the information, but there's a lot of good brokerages and trading firms all over the country now. And so, I mean, you were at the time, like in your early 20s. Was this one of your first jobs that you had right out of college? So
That's
that just
right.
has to be so overwhelming, being exposed to like that sort of money and those sort of masters of the universe.
Yeah, I mean, you get caught up in it. I think so. A couple of things. Yeah, keep in mind, I was a little kid from Montgomery, Alabama, and I was working on a trading desk full of folks from Garden City, Long Island, and Stony Brook, and
Mm.
I had a pretty severe Southern accent at that point, and and was treated as such when I was up there. So I was absolutely, I did not fit in. I had to cut my way into that
Mm.
space, and there were some really helpful mentors along the way. I think Wall Street is not inherently bad or inherently good. It simply is. It's a mechanism to flow capital.
I agree.
There's an opportunity for little investors like you and me to tag along beside big institutional investors that frankly have the power and the information. It just learning how it works was the most fascinating piece. We're as small time investors, we're at a distinct disadvantage when it comes to investing your money in Wall Street. But the historical facts are the long-term market returns of the New York the New York Stock Exchange, the Dow, the Nasdaq. It
S&P.
goes up and to the right over time, right? 7-8%. So it has historically been a great place to preserve and grow wealth. And I'm grateful we have it as a tool to help us all retire in the future.
So yeah, it's actually, I don't want to get too sidetracked because we've got a lot to cover, but I do really enjoy investing a lot. I've really gotten into it more and more. So I had some companies, I had some gyms around Orlando, and I sold those in 2019, thankfully, right before the pandemic. And so since then, I kind of had a little bit of time to use and money to invest, and I started dabbling around in it, and it's very fascinating to me. Do you think that it's possible for the retail investors, like you kind of said, like you and I, to beat these institutional investors without any inside information? And so like now you said you work for Bear Stearns, and they're shut down. So hopefully you can talk about them. I mean, there had to be insider trading going on, right? Like I guess my question is like, is the advantage that these guys have based solely on kind of like insider trading?
I would say that broker dealers and investment banks work really, really hard to build Chinese walls inside of their business, but between the investment banks and the sales trading desks. But there are relationships that live above and below the wall, right? So information can be leaked. I think we've all seen a lot of folks arrested for insider trading. It is clearly happening. I think what they have more of, though, frankly, is information and data. We look to Robinhood, kind of the way they were making their money through that app, and they were basically selling that data to hedge funds, so hedge funds could then examine that data and try to run ahead of those trades or skim money off those trades. Can an individual beat a stock picker? Yeah, any given year, any given day, absolutely. I think that you can get into and out of positions and clean the clock of many long-term institutional investors. The trick is to do it over time. So I kind of subscribe to buy the index and move on, focus on what I where I can invest money and have influence over the outcomes. Investments in small, closely held businesses, startups, things of that nature. But I'm happy to hear that you're playing the market. It seems like it's working out well for you.
Well, it has, it's also worked out really well for everybody who got involved in 2020 because we just had a massive bull market. But yeah, just this week, it's May 20th today. We had such a correction. I just remember sitting there thinking, like, there is, like you mentioned, invest in things that you can control the outcome. I remember a little bit of helpless feeling. It's like, for a week, every day after day, it's going down and down and down, and you just like, you can't really do anything. Like, you made the decision to buy. That's all you can do. You can make the decision to buy or to sell. Other than that, it's out of your hands. And that was the first time I kind of had this feeling like, oh, this is a little frustrating that, like, I can't hop on the phone and like start making calls and change the direction of this. Like, I have to hold or sell. That's it. That's my only two options. So yeah, it's interesting. What was like, when you were working there, were you making trades or making calls? Like, do you have like one of the best ones, any like success stories of one that you just really scoped out that was a diamond in the rough?
Remember, I was there in 1999. You couldn't buy anything that was going down. Nothing was going down.
Right.
So, I mean, we were trading WorldCom and Enron back then. BlackBerry was still a really popular stock and growing. It was a very different time. I'll never forget debt. I think I took 5,000 up and turned it to 15,000 in a short couple of weeks. Was sharing with my dad my success. He provided me a stash of capital to invest in for him and tripled his money in about as many months. And everybody was making money. In a bull market, it's easy.
Yeah. Yeah. So, and then a lot of that was related to the .com, obviously, which when the .com crashed, that took everything else with it. But I mean, did anybody, because like somebody had to make money somewhere, right? Like somebody sold early enough before the whole thing cascaded downward. They locked in the profits. I mean, was that any of you guys, or did you guys get taken out with the rest?
Unfortunately, that was not me. I didn't make the big short on the tech industry back in 1999. I wish I would have, because I think I'd be hanging out with Branson down at Design.
Oh man, okay. Well, cool. So, like you said, you sharpened your teeth there. You brushed elbows with some guys, and then what was next for you?
Yeah. So after a couple of years in New York, you kind of go, all right, look, this has been fantastic, but I'm living in a 3-story walk-up building in about 600 square feet, and this is as good as it's going to get, right?
Yeah.
So, growing up in Alabama with a home and access to hunting and access to, golf and the lake, I was like, I longed to replicate that in my life. So my then girlfriend at the time and now wife and I applied to graduate school, me to business school and her to law school, and ultimately landed up down at Wake Forest University, where I spent 2 years and she spent 3 years in law school. So it was kind of a nice break and pause. We were just newly married, so we were kind of playing house while in graduate school, which is a fun time. You just rack up loads and loads of debt, and get yourself a dog and enjoy life for a little bit. But from business school, it propelled me back into finance and investment banking with Wachovia Securities. I'll tell you a quick story here. When I joined, my mentor, who was a graduate of the same business school, pulled me aside and said, "Kevin, I need to let you know that there's a target on the back of your head, and it will get larger and smaller depending on whose ass you kiss and how much money you make. Mark my words, you will be executed and none of us make it to the top." I was like, oh, this is great. What a wonderful way to introduce me to the culture of your business.
Wow.
So more investment banking. After about 2 years, it dawned on me. I was making more money than I could spend, and I really didn't like who I was becoming. The people around me didn't have pictures of their families on their desks. They weren't able to or didn't choose to coach their kids' baseball teams. Coming into the office on Saturday to get a deal done became more important than spending time with their children. And I didn't see anyone that I wanted to grow up to become, and reached out to my father at that point. I said, "Dad, look, I'm holding on to the golden ring here, and I don't like the way it feels. I need to change my course, change my direction." And at that point, he was going through the process of actually selling his dental practice. he said, listen, son, you know how to value things. You know the dental industry. Maybe you'd like to explore an opportunity with the dental broker that's helping me. So I reached out to that individual and connected with him, and within maybe, I don't know, 2 or 3 months, was done with Wall Street and was in a with a dental broker here in Charlotte.
Wow.
So it is vastly different valuing a dental practice compared to valuing a publicly traded insurance company, right? We got really poor reporting. We have many times, especially single doctor practices, where the dentist isn't completely sure what the income is, or what the overhead is, or why they spent $100,000 on legal expenses the previous year. So it was pretty eye-opening to see these small business owners who happen to be dentists not have the greatest grasp on their financials.
Well, I mean,
So
they don't teach that in dental school, right? I mean, you learn how to
right.
be operational chair side, but there's just almost no business management courses taught. And it's like, I don't really blame the schools per se, because it is a totally different can of worms. But yeah, that's just what they're taught.
Yeah, so it's what they're taught, it's what they're passionate about, right? And we also gravitate to what we're good at. So, if you're good clinically, that's where your happy place is. It's where you feel good. It's where you're going to go. If you're not great with numbers, you're not going to spend a lot of time looking at them. Dentists, I think, also suffer a little bit from the ability to make such a wonderful living that they reach the point of diminishing returns relatively quickly. So let me tell you what I mean by that. Like, the point of diminishing returns is where you can't pay me to work you can't pay me another dollar to work another hour. And dentists typically are so profitable just because of the nature of their businesses, that if they're making $200,000, $300,000, $400,000 a year, it doesn't make a lot of sense for them to focus on overhead reduction or reimbursement rates with their insurance companies, or training of their team, because they've reached financial independence and have carved out a wonderful life for themselves. So as a result of that, there's a lot of inefficiencies inside of doctor-owned dental practices that, we'll get to this in a little bit, but that's really what private equity caught wind of and identified as an opportunity. And that's really one of the real forces that is driving the consolidation inside of the dental industry. So anyway, so I worked with this shop, Value and Selling Practices. It was great. I did about 120 trades with that group in a couple of years, and we started selling practices to Heartland Dental Care. This is way back when Heartland didn't have 100 practices.
Wow.
Today, they just did a large merger with American Dental Partners. They've got well over 1,500 practices today. But they were interested in some of our listings. And at the time, Rick Workman was the CEO, and Justin Wendling was running business development for him. And Justin was kind enough to kind of take me under his wing and show me how Heartland created value in the space. Now, our clients that were accustomed to getting 60, 70% of collections for their business were pretty floored when Heartland was coming in offering them 100% of collections. It was life-changing for their valuations. But when I learned from the team at Heartland that really that simply equated to 2 or 3 times that doctor's EBITDA, and Heartland was going to trade ultimately for 12 to 14 times EBITDA, and that arbitrage of 10 to 12 turns kind of came to light. I said, oh my God, this is
10 times more. They're making 10 times more on that.
Yeah. So, I mean, I will buy anything for 2 and sell it for 14 all day long, right? All day long. And that's really what Heartland got good at. And coupled with their amazing training and the great team and the great culture, but it was at its core an opportunity to create a lot of value through the arbitrage of the multiple between buying low and selling high.
Yeah, that's great. So yeah, I mean, and then so while you're doing all this, I mean, this just has the wheel spinning, I'm guessing, right?
You start to see this kind of wealth creation and value creation And it wasn't after spending maybe 6 months with Heartland, the light bulb came on for me. And I said, I've got to get in one of these businesses. I really need to understand the way these businesses work. So surveyed the market and was good enough to get an offer from Affordable Care, the parent company of Affordable Dentures. So keep in mind, right, Dad's still a standalone dentist. He's run his practice. He's had a great run. But I go home and tell him I'm going to work for Heartland, and DSOs did not have the reputation they do today. He was not happy with my career choice. So again, this is the second time in my life he's been not happy with my career choice. Once leaving Bear Stearns and now going to work for the enemy, the DSO. So, and he's like, what are you doing? These guys are putting dentists out of business and I mean, it was a rough Thanksgiving, Austin. It was not a great Thanksgiving. But what I loved about Affordable was they worked on a patient base that really no one wants to see. They took Medicaid at their locations, and they provided a service that very few dentists wanted to provide, which is full mouth extractions and providing dentures to patients for the rest of their lives. It's pretty, and they do a great job at it. At Affordable, I saw more tears of joy and hugs from patients to doctors than I'll probably ever see in healthcare.
Wow.
So got to see that. That's the emotional side of the business. Had great leadership there with the CEO, CFO, and operations team, and really began to understand value creation inside of a DSO. Value creation from the acquisition engine, value creation from the same store sales engine, from the de novo engine, and then really wringing out operational efficiencies by bringing some centralized services out of the practices and up to a centralized service hub. It was awesome, right? So I'd been inside of the financials of a dental practice for 4 years with a brokerage company, and now I was actually living inside of these dental practices. I've kind of Monday through Thursday, I would be in a practice each and every day, learning, watching, observing, and then instructing and training. Very different than my time in New York on Wall Street, very different than investment banking, but a lot of fun all the same.
Wow. And so what were some of the key things that you picked up on when you were doing that?
Yeah, the biggest one is that dentistry is a people business. These businesses look very straightforward on an income statement. There's production that turns into collections, and the collections goes and feeds the landlord, the team, the benefits, the Patterson and Shine reps get paid, and then whatever's left over at the end of the day is entrepreneurial profit or owner profit. The spreadsheet makes it look simple. The challenge is there are a lot of people inside each and every dental office, and keeping everyone aligned on a common goal, keeping everyone patient-centric, trying to get everybody to focus on the greater cause or greater mission compared to their individual needs is a challenge each and every day. There's just a kind of a churning sea of chaos in many, many dental practices nationwide. And you kind of look at Affordable, they had this churning sea of chaos, at least a churning sea. I mean, some of them were not chaotic. At 120 locations when I got there, and they scaled to 210 by the time I left.
Wow.
What I learned was going from 1 to 2 locations is exponentially more difficult than just twice as hard. And going from 120 was exponentially more difficult than just simply doubling your efforts. Building these businesses is really, really hard. And right now we see a lot of dentists thinking that they want to grow and scale, and that they can do so maybe on their weekends or in the evenings. Jumping into building a group practice or a DSO is more than a full-time job.
And so during this process is what led you to finally decide to open up your own M&A advisory?
Yeah. So, I would say Affordable made it look really, really easy. So when I left, I actually opened a dental practice in your hometown of Fort Mill. We opened it. So North Carolina and South Carolina are vastly different, right? So right over the state border. So in North Carolina, you can't get a title loan and you can't get fireworks and you can't ride roller coasters.
Right.
So right over the state border where the Carowinds exit is, we opened up our practice.
Nice.
So it was as close as possible to my home. And we opened up a business called Mundo Dentistry. It's a business that's still around. It was Spanish as a first language, though. The
Wow.
Charlotte market was experiencing exponential growth from the Hispanic community, and there was really no beautiful dental alternative for that community.
Wow.
So we identified the opportunity and opened up a really dentistry same day. It was a success right from the start. It was not easy. It was hard fought, but we were able to grow that business from. We could have used you, Austin, because we had to find space. We built it out. We got a little end cap space and did everything, right? Built nine.
¿Te hablas español?
Sorry?
¿Te hablas español?
So this was another problem with the business plan, Austin. I didn't speak Spanish.
You just had to have really good staff, really good bilingual staff.
I had an incredible staff, but I couldn't understand a word anyone was saying. Yeah, so it was, I think that was, I'm certain, that is a business that taught me more about myself and more about dentistry than anything. I feel like I survived it. We ultimately sold it to the associate that was working for us. And yeah, I made a little bit of money in the trade, but what I learned was the most valuable. My father made running a dental practice look easy. A lot of great dentists that you know and I know make it look pretty straightforward and relatively painless. My experience was vastly different. A dentist, or at least a business owner that is a dentist, is the CEO, chief marketing officer, CFO, head of human resources, bears all the clinical risk, is responsible for many, many people's mortgages or rents. And at the end of the day, after taking on all that risk and paying all those people and wearing all those hats, he or she gets paid last. I needed that experience to fully appreciate what my previous clients and clients today go through each and every day. You're a business owner, I'm a business owner, and our business babies are something we're focused on all the time. And we don't have to worry about patient care. And we're not, it's a very different business, healthcare, than any other sector. And it really gave me a lot of empathy and respect for every dentist out there going at it on their own. So Mundo was great. I got the lessons I needed from it, and helped me really form the business plan for Tusk. So with it, we talked about this before we hopped on, but what I was seeing in the industry, Austin, is that kind of what Heartland exposed, right? Heartland had a lot of information. They knew that private equity groups were going to value their business at 12 to 14 times their trailing 12-month EBITDA. And dentists who were selling had never even heard the word EBITDA. They were told by brokers that their practice is worth 70% of collections. So there was just a vast amount of information asymmetry in the market. So I made it my mission to really break down those walls of information asymmetry and increase the, let's call it, business acumen or business IQ of all dentists. So when we launched Tusk, we spent a lot and still spend a lot of time on education. If you go to our website, there's www.tusk-partners.com. You'll see lots of blogs, lots of videos, lots of webinars, lots and lots of education. I do not believe everybody should start a DSO or sell to a DSO, but I certainly believe you should know what that option looks like. So since opening our doors, we've worked with hundreds of dentists and groups nationwide. We provide M&A advisory services to dentists and owners of groups that are interested in partnering with DSOs or other private equity groups. We've done, I guess, about $400 or $500 million worth of transactions to date. And we get the great pleasure of creating multi-generational life-changing wealth events for our clients. And it is hard work. It is late hours. It is long weekends. But really, for the first time, I feel very personally connected to my client. When I was in the investment bank, the client were the shareholders of some company. Today, the work that I'm doing, I know the owner, I know the owner's spouse. Sometimes I get to meet their children, and I see the impact that sales like this and partnerships like this have on people. And it really is, it's a real gift, and it's a real pleasure to get to do this.
Yeah, well, and I think historically DSOs just had a bad name, and probably what your dad was familiar with too, because like the first go around, they kind of really didn't do things the right way at all. But they also learned and evolved. I think they even went by a different name, but then, now it's a much different animal than it was a long time ago. And so there's this, I don't, maybe it's a misconception, or it has a negative connotation around thinking DSO, because you kind of associate it with like the man, right? Like there's this guy at the top and he makes all the money and everybody else is subservient to him. But really it's a lot more of a collective than you would think, because most dentists who sell to DSOs retain a significant amount of ownership, right? I mean, how often are they selling 100% of their practice versus keeping 30-40% or whatever?
Yeah. So in all the transactions we've done, we've only had 2 doctors sell 100% interest in the business. Every other transaction, there is some portion of the proceeds that's rolled into equity. And also, I'd also say, if you've seen one DSO, you've only seen one DSO. I mean, there are 100 private equity-backed DSOs. There are thousands of dentist-run, debt-funded groups, and they're all unique. They all have their own cultures, their own benefits, their own weaknesses and strengths. But they're really, there's been a constant and continual evolution and iteration inside of this space, and it's iterating more rapidly today than it has in the last 5 years.
Yeah, the way I equate it to is just taking some chips off the table, right? Like we talked about investing earlier. It's like if your investment has increased, 60, 70, 100%, maybe it's time to sell some of that, right? Not all of it, but some of it. And it's the same thing. It's like your dental practice has increased in value by a certain amount, because especially now EBITDAs are much higher. We talked about 2 to 3 earlier. I think some of them are trading between 4 and 6. And so, the market is strong. I believe it'll get stronger, but either way, it's increased a lot in value. So you can sell some of that now, right? You can get paid out right now, and then you can still maintain part of it, so that you participate in the upside as you continue to grow it. I mean, is that what you have to coach some of these guys through?
Yeah, well, we had this exact conversation last night with some clients. So they've got a business that we've got an offer for. It's close to $60 million. They're 4 partners. They're going to get to split up $60 million. And I reminded them that they probably all have retirement portfolios in a risk-adjusted portfolio in various stocks and bonds and equities. I'm like, guys, the biggest exposure you have is to the dental market inside of your state. Like that's where most of your assets live.
Yeah.
So taking some chips off the table and redistributing those proceeds that you get in cash into a diversified portfolio of investments is a wise decision to make. Anybody who owns a business of any type, that business is probably their largest income producing asset and many times their most valuable asset. So at some point we need to diversify away from that. I'd also say because dental practices and groups are so valuable today, there's a lot of energy around, are we near the top? Maybe now is when I need to go ahead and push a little bit of these chips out and recapitalize and take off a little bit of risk.
Yeah. And I think that's great. And I think it's great advice. So let's talk real estate strategy for a little bit here. When you had,
for sure.
When you had Mundo Dentist, like you talked about being in need of brokerages, services, kind of things. Like what was your strategy there? I know obviously South Carolina was very strategic, but like, were you looking for retail? Were you looking for office? I mean, did you have a square footage in mind? What do you think?
So I knew enough. So I knew enough to know we wanted retail and we wanted good signage, and that was it. Right. So we kind of knew where we wanted to be. And we engaged a local commercial real estate broker that frankly didn't have any dental experience. And I didn't even know that the demographic studies existed. I mean, we had a very clear mission inside of our business, And we opened up a practice and had no idea where our patients were. I'm surprised that it worked out the way it did. So, we negotiated. My wife's a commercial real estate attorney. She helped negotiate the lease. We negotiated a little TI. We worked with Patterson to upfit the space. I'm sure we got taken advantage of there. I felt like every time I turned around, I was writing a check to someone. So it was not my finest moment as a business owner on the real estate side. And come to find out,
that's how you learn, right? Like you have to learn some way.
Yeah, it's an expensive lesson. Like if other people don't have to suffer the way I did through that, that would be best.
Well, yeah, what we say is like, hey, get someone who's an expert in your industry, right? And what that means by expert is someone who's done at least 10 deals, because like you said, you work with someone, they don't really know a whole lot about dental. It doesn't matter what your industry is. You don't want to be that person's first client in that industry, because there's so many nuances, especially in dental, but every industry has their own nuances. And so it sounds like you learned that lesson pretty quick.
I learned it the hard way and quickly. Yes.
So, but it sounds like you got a good site. I mean, aside from kind of, picking it blindly, seems like there were good things about it, like high traffic, good street visibility. I'm guessing, I know that area actually growing up there, it's growing like crazy. So I'm sure that all helped with the success of it.
Yeah, I mean, it certainly did, right? We felt good about it. We had in-cap space, we had good signage, good frontage. But I think some of that I learned through watching Affordable Dentures open practices. I think that was an evolution of the model. When Dad was opening up his dental practice, dentists used to be a destination. They'd be back in office parks.
Yeah.
They could be off the beaten path. They had small professional looking signs. This is still a holdover from the time when dentists couldn't really advertise in the yellow pages, but simply have their name in there. So, I was smart enough or lucky enough to know that I needed a retail location, that my location would help drive patients as well.
Yeah. And, we like coaching, looking at rent as a factor of marketing, because like if you go to these office complexes, you're not going to be getting the marketing that is a result of people driving by, the street traffic, the sign visibility, all that kind of stuff. And so what that means is you're most likely going to have to pay for that via traditional ads, whether that's direct print or whether that's, digital media, social media, Google, all those things are bidding platforms. So they're only going to go up over time. And so most of the time, if you break down, okay, how many patients am I going to increase my practice by per month, or increase my repeat visits by having a prominent location versus paying for it with online digital marketing. Not that digital marketing is bad by any means, not that direct mail is bad, not that any of those things are bad. You need all those, but can you reduce that by a greater amount than you're increasing your rent? Most of the time, the answer is yes.
Yeah, that's a fascinating concept, right? So I've never heard it framed up that way, but it makes perfect sense to me, because when we look at income statements, we're always looking at rent as a percentage of revenue and advertising as a percentage of revenue. And then we divide new patients over the year into the advertising spend to get the cost of acquisition of new patient. And what we never think to do is, we've got the address. I can hop on Google Maps and see where you are. I can see if you're in Class A in cap next to Starbucks, but I've never married the two thoughts together like you just did.
Yeah. It's interesting. I think actually I owe Emmett Scott for the phrase, like, hey, classify rent as part of your marketing budget. He was the first person to actually coin that phrase in those terms, but it's something that we've been doing. We just didn't make it as concise and as pretty as that. But yeah, it really does help give you optics into, the decision-making process. So, and then now I'm curious too, you guys are doing a ton of transactions. What are you seeing? Obviously you're not really involved in the site selection process because that's kind of been weeded out, right? Like these dental practices that are looking to be acquired by a DSO, they probably have done a really good job in their site selection up front. So like, is there any commonalities that you're seeing in these spaces? I know everybody's a little different. They have their own niche, but still.
Yeah. So I would say this, in every one of the group transactions we do, at least one of the buildings is owned by a dentist or a syndicate of dentists. The question they always come to us with is, should I sell or should I hold on to it? Because we're about to get, a private equity backed DSO to sign a 10-year lease. And that's where I say, look, if it's a town like Montgomery, where I grew up and I know what's happening inside of the city, I can offer you some pretty sound advice. If it's Charlotte, I can offer you sound advice. Outside of that, no. You need to get a hold of somebody like Austin, who knows the market, knows the demographics, knows kind of how the population is swinging, to help you understand if you need to get out and sell while you have a 10-year lease attached to it, or if it's a good long-term investment for cash flow needs.
Mm-hmm. Yeah. So, I mean, are you seeing like the average footprint? Are you seeing those increase? Are you seeing less move away? More of a shift away from office space? Like, how many transactions are the dentists still located in office spaces versus maybe more retail spaces?
Yeah, it's such a deal specific question. It varies. I can speak to this though, with respect to what drives value. The larger footprints, where you can have 2 or more doctors inside of the practice at any given point, are much more valuable than five operatory practices. Simply because it allows for redundancy. And anytime we have redundancy in the clinical seat, we decrease the risk of that business, and we increase the value of the cash flows. So some of the most valuable transactions we've done have 10 to 20 operatories, multiple doctors underneath one roof, and a really healthy EBITDA. And what the owner has built there is a business that has multiple providers servicing the patients, and it's a low risk stream of cash flows.
So is there a certain sweet spot where it makes sense to get acquired by DSO? Like for instance, if you're a single location doctor, or versus like 2 locations, like, because at some point it becomes like like you mentioned, increasingly difficult to scale. Yep. So do you see kind of like this, is it smarter, do you think, to try and do that early on, maybe when you have only 1 or 2 locations?
Yeah. So first things first, locations surprisingly don't drive value. We get asked how many locations do they have? Just more of a curiosity than anything.
Yeah.
And you can kind of highlight that by saying, would you rather have a 5 location group with $1 million of EBITDA, or 1 location doing $1 million of EBITDA, right? And I want 1 box, 1 culture, 1 million of EBITDA. That's what I want. So when to sell, it's tied to a couple of things, right? If you are growing and scaling, you're going to come to a fork in the road where you're going to have to add additional infrastructure if you're going to continue to grow. Typically around 3 to 7 locations, depending on the size of your business, where you're going to have to hire a CFO, hire a COO, start centralizing some services and adding some costs. And if you're there, you need to know that you're probably going to be adding $300,000 to $500,000 worth of expenses, which could mean you need to add as much as $3 to $4 million of revenue with the EBITDA that comes along with that, just to break even. So you're going to add all these people. Now I got to buy all these businesses. Now I'm right back where I started from an EBITDA perspective. So and a lot of people call that the dark tunnel, when you're adding overhead and preparing for the next phase of your growth. But you got to suffer through that before you get that J-like curve and get back to high growth in your EBITDA. So that is absolutely a time where you need to hit pause and say, am I really in this for 5 more years or not? Because it's going to take you 5 years to get through it and then get the return from it.
Yeah, that's a good way to look at that. So any parting words of wisdoms for any dentists who may be looking at selling?
Yeah, look, I would say there's still information asymmetry out there in the market. If you are curious about what your business might be worth, don't believe the folks who are shooting you unsolicited offers. Feel free to give us a call. We're more than happy to spend time with you to understand you, your business, and what you're looking to achieve. They can reach out to me, Austin, at tusk-partners.com. And you can always reach me on my cell phone at 704-654-0152. So
cool.
just let's make sure that we make an informed decision.
Perfect. Yeah, and for everybody listening, I'll add that to the show notes as well. So Kevin, this is great. Thanks so much for your time. Thanks for the words of wisdom, and it was a pleasure.
Also, it's always fun to talk to somebody local who just is coming back soon, I feel sure.
Yep, that's the plan. That's the plan. So we'll have to get together, in person when we get back up there.
I'd love that. I'd love it. Thanks for the opportunity.